Welcome back to Library of Wealth. Today we have Gareth Soloway and Benjamin Cowen discussing the SEC's implications for the crypto market and how Bitcoin is going to shock investors in the coming months. Soloway and Cowen point out that Bitcoin dominance has risen to almost 52% and attribute a huge part of the increase to the SEC targeting altcoins and labeling them as securities. Soloway does note that investors seem hesitant to invest in altcoins and are seeking the perceived safety of Bitcoin, which interestingly, the SEC has deemed not secure. With investor confidence in Bitcoin growing, Soloway and Cowen suggest that it will continue to overshadow altcoin projects and absorb liquidity from the entire market, increasing the focus and dominance even further. Currently, the price of Bitcoin is sitting just above 30,300, and their next few weeks are crucial for investors in the crypto market. Let's get right into the latest interview with Gareth Soloway and Benjamin Cowen as they discuss their crypto prediction for the last half of 2023. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
It was just below 50%, and we talked about how we were likely going to see a pretty significant move this past week. And interestingly enough, here we are at almost 51.5%, and I believe we tagged 52% briefly on one of the days. So it is interesting to see that breakout. What's your takeaway from what's going on here with the dominance?
Yeah, I think the dominance just kind of reiterates how the SEC is going after so many of the alts and calling them securities. And it's basically a combination of people being very hesitant to put money into the Cardanos, the Matics, those kind of things, and saying, okay, well, which one's the safe one where the SEC's basically said it's not a security, that's Bitcoin. Then you throw into the mix that kind of the news from BlackRock over the last week where they're like, hey, we're going to file for a spot at ETF. And we have actually seen multiple other big Wall Street financial institutions filing for these Bitcoin ETFs. So it does seem like everyone that's giving confidence to people being in Bitcoin. And that dominance reflects that, I think.
Yeah, I think it's sort of just that phase of the cycle that we're in, right? Where the fundamentals of various altcoin projects don't really matter so much if we're just in the phase where Bitcoin sucks in all that liquidity back up. And it really does seem like we're in that phase. And one thing I thought, and we were talking about this earlier too, about the dominance is I think a lot of people are sort of used to the idea of low Bitcoin dominance because they joined crypto kind of after Bitcoin had its parabolic rally in late 2020, early 2021. But the thing that I can't, get past is if we can go from 60% to 48% in 4 weeks, why can't we go from 48% to 60% in a very similar time period? And I think that sort of goes back to what we were talking about as to getting that move up to that 60% level. One thing that I wanted to talk a little bit about with you is, I know that we can talk about the lower highs with Bitcoin dominance, and this is what everyone talks about, right? Like everyone is a huge believer in the lower highs by Bitcoin dominance from one cycle to another, and it's pretty obvious, right? I mean, it was like 95%, and then we hit 73%, and so the idea, of course, is well maybe it only go to 60%, but there's this one thing that kind of keeps bugging me, and it's the fact that we also have higher lows. Yeah. And I think this is something that I don't think should go overlooked. This low here in 2018 was at 35, but this low in 2022 was at 38. And so I'm so curious, what's the more important trend here? Is it the lower highs or is it the higher lows?
What we have here in technical analysis is called a wedge pattern, which is higher lows and lower highs. And so it creates, and you can see I have a couple of the other lines. This was the breakout line we discussed where it was clearly breaking out once it got through that 49% level. And then this is kind of the target zone that you and I agree on, which is that 60, 59%, where you have pivot point, and then that creates that trend line, and then the downsloping one going back to the dominance prior. And I think you made a great point is that so many of these investors have come in after 2020 in terms of Bitcoin, so they don't remember a period when Bitcoin dominance was so massive, so dominant, if you will. And I think it's important because people are like, oh, well, the alts will at some point rally back. And that may be the case, but it may be longer than people think. And Bitcoin may be more dominant for a longer period of time. But when you have a wedge pattern like what we have here, the ultimate aspect is that you're going to get eventually these two lines. So these two lines will meet at some point in the future, right? A triangle, you have the two lines getting closer and closer. And what that's going to cause is it's either going to cause a breakdown or a breakout. In this case, I would not be surprised to see a breakout in this scenario. Granted, it could still be 3-6 months away, but at some point, a wedge pattern like this is very likely to break out to the upside. So 60% will be resistance, but don't discount the possibility that it could eventually break through that and go back to previous levels that we haven't seen for years.
Soloway notes that the current market sentiment reflects a lack of interest from retail investors, leading to an increase in Bitcoin dominance. He argues that if new participants are not entering the crypto space, the focus will remain on established assets like Bitcoin and Ethereum, highlighting the entry of institutional money into the market.
No matter the price action, right, we've still very much been in sort of the pre-halving year mindset where people just don't really care. And it's one of the reasons, I think, going back to the dominance as to why the dominance goes up. If retail doesn't care, right, if we can't get new people into the space, then there's going to be more people that are going to focus on the blue chips, right? They're going to focus on things like Bitcoin and or Ethereum, right? Those are going to go up in dominance generally, especially Bitcoin, and the altcoin dominance tends to go down. And that's just, I think, where we find ourselves right.
And I think what's interesting about that point too is that if you think about the position that Bitcoin and crypto is in right now, you have the potential for regulation, but Bitcoin and Ethereum, when you bring in institutional money, they're not going to go and be like, oh, let's buy some Pepe, right? I mean, they're going to be focusing, and remember, they have these fiduciary responsibilities for their clients to focus on the best quality, the safest. And so really, you could actually see massive inflows of institutional money come into the space, which BlackRock is almost starting the thought process on, is that that'll actually increase Bitcoin dominance because so much big money could come in, and it's not going to go to the 50th on the market cap list. It just isn't.
Right. Well, the other thing too by the dominance is people need to remember that the dominance on TradingView includes stablecoins, and stablecoins now I think are around 115 billion plus or minus a few billion, which is a significant portion of the market cap. And you're talking about 10% or so of the market cap that did not exist back in 2018 or so, not to any same degree. And so one dominance metric that might even be more useful to look at is the dominance excluding stablecoins. And when you do that, I mean, we're already, we're at that 55% level already. You can see that we've taken out that prior high that we were at not too long ago. So I do think there's there's reason to look at it both including stables and excluding stables to just get an idea of how much is the stablecoin market actually impacting this sort of stuff. Here it is. I've loaded it up. You can see that the excluding stables, we're now at 56%. And I think the reason why that's important is because we talked before about breaking the range high on the dominance, right? This 49% level, and then once it breaks, it should move pretty quickly. Excluding stables, we also broke the range high, right? But we broke it last week, and so now that that's broken, I think there should be plenty of room to move higher.
Soloway and Cowen discuss a pivot coming in the next few weeks and are preparing for the crypto and stock markets to rally. Soloway also acknowledges positive regulatory developments, but expresses concerns about the impact of de-risking in the stock market and how that will have a negative impact on cryptocurrency. He says, while the regulatory landscape and rules for altcoins are still unclear, the positive impact for Bitcoin far outweighs the uncertainties in the broader crypto market. Soloway thinks that Bitcoin is more appealing than ever before because of recent developments with BlackRock entering into the Bitcoin ETF space. What do you think about the latest interview with Gareth Soloway and Benjamin Cowen? And what will be the next big move in Bitcoin in the coming weeks? Comment down below. Thanks so much for watching. Don't forget to like and subscribe. We'll see you in the next video.